Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 8th of March 2019. I'm Darren Sinden, and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's kick off as ever with a look at the overnight changes and price moves to be aware of. Relatively quiet in the global foreign exchange markets, considering some of the news flow we've seen. There were a couple of moves to note, though. First of all, the yen strengthening quite significantly against the US dollar, the yen gaining by 0.43% against the US currency, dollar yen trading at 111.10 shortly before we recorded the video. Dollar index on the back foot, down by around 0.18% over the session, still up over the week, but drifting backwards. Of course, we have key economic data out of the US later today. It'll be interesting to see what effect that has on the strength of the dollar. Other movers of note: the US dollar continued to gain ground, against the South African rand, adding another 0.15%, and the rand trading above 14.50 to the dollar. There was also modest gains for the Kiwi, the New Zealand dollar against the US dollar. Sorry about that. 67.61 trading shortly before we recorded the video, up by around 0.13%. Although the Aussie dollar did not follow suit, I note. Okay, what's on the calendar then? Events that may move the markets. Well, we've already had some pretty interesting data out this morning in the shape of balance of trade data from China for the month of February, and we'll look at that in a bit more detail momentarily. To come at 7 a.m. GMT, we'll have factory orders data out of Germany for the month of January. That's a series of data that's been disappointing over recent months. Is there going to be any change there? I wonder. At 13:30 we cross over to the US. We'll have building permits and housing starts data for the month of January then, but I think that'll be totally overshadowed by the main event, which is of course today's release of the non-farm payrolls for February, including the job creation numbers, average hourly earnings, labour force participation and the unemployment rate. We've had, of course, two bumper months of blockbuster numbers. I think it's fair to say, will we see something of a slowdown in job creation? The previous read 304,000, the current forecast 180,000. The question is, will the government shutdown have taken a toll on US job creation? Have we seen a peak in that number? And will the unemployment rate slip back below 4%? The consensus forecast there is from a read of 3.9%. We'll also have Canadian unemployment data at 13:30 as well. Of course, that always tends to be overshadowed by the US numbers. And then to round things up at 16:30, we'll have a speech by ECB board member Mersch. Okay then, breaking news and comment that's caught my eye. We finished the calendar with a mention of the ECB, and we'll start the headlines with a mention of them too. Mario Draghi and his co-members of the ECB Council met yesterday, and they cut growth forecast for the Eurozone and announced an additional round of bank funding through a third TLTRO, or Targeted Long-Term Repo Operation. Mario Draghi also said that Eurozone interest rates would stay lower for longer. A very marked turnaround from what Mr. Draghi was saying earlier, and people are calling it a double dovish policy change. Meanwhile, Chinese exports fell by almost 21% in February, the largest fall for 3 years, and imports into the country grew more slowly than anticipated, and as a result the country's trade surplus collapsed. So very poor balance of trade figures as far as China is concerned, and many in the market now are wondering just how much that's pointing towards a harder slowdown, can we call it, in the Chinese economy. EU officials have told the UK to rework its Irish border and backstop proposals ahead of a key vote on Brexit in the UK Parliament next Wednesday. This is almost an 11th hour intervention, as there are just 21 days left until the 29th of March deadline, when the UK is due to leave the European Union. Okay then, food for thought, something to take away with you into the trading day and beyond. And why not think about this? Many market technicians are watching the Dow Jones Transportation Index, a key component of Dow theory, one of the earliest forms of technical analysis posited by Charles Dow, who's also seen as one of the grandfathers of the discipline. The index has now fallen for 10 days in a row, its longest losing streak since 2009. and the index is also often seen as a barometer of US economic performance. You can see the chart here of the Dow Jones Industrials, and this was drawn yesterday. So it says it's fallen for 9 straight days, but after last night it's a 10-day losing streak. You can see we've broken an uptrend line. The index remained up 12% still year over year, but nonetheless it's a worrying downturn, and it's just the sort of thing that weighs on sentiment, shall we say, and could tip the balance if we saw some poor US economic data later today. Okay, it's risk warning time. Please do take a moment to read this risk warning thoroughly. Trading CFDs and foreign exchange on margin can be a risky business. If you're uncertain about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative, who'll be happy to take you through those. And as I say, do read this risk warning thoroughly from top to bottom, please. Okay, thank you for your time today.